Circle processed $12 trillion in USDC transactions last year, and most crypto investors still think this coin is boring. Let that number sink in for a second. $12 trillion. SWIFT, the global bank messaging system that moves money between every major financial institution on the planet, handles roughly $150 trillion a year. USDC is already doing nearly 10% of that volume, and it's been live for less than 7 years. This isn't a niche DeFi experiment anymore. This is dollar infrastructure being rebuilt on a blockchain, and the people who understand what that actually means are positioning themselves right now before the rest of the market catches up. So why is everyone sleeping on this? Because USDC always trades at $1. It's a stable coin. There's no moonshot tweet, no 400% weekly candle, no influencer pumping a price target. And that's exactly why the smart money loves it. Because while retail is distracted chasing the next meme coin, institutions are quietly building entire financial systems on top of USDC, and the company behind it is about to go public. Let's break down what's actually happening here. USDC, is a fully backed, dollar-pegged stablecoin issued by Circle. For every one USDC in circulation, Circle holds one actual US dollar or a short-term US Treasury equivalent in a regulated bank account. That's not the case with every stablecoin. Tether, the market leader with roughly $110 billion in circulation, has had years of controversy around whether their reserves are actually fully backed. USDC doesn't have that problem. Circle publishes monthly attestations from Deloitte. It's as close to a digital dollar as anything that currently exists in crypto. But here's where it gets interesting for your portfolio. USDC isn't just a place to park cash between trades. It's become the backbone of an entirely new payment layer. Visa settled transactions over Solana using USDC. Stripe reintegrated crypto payments, and USDC is the primary settlement currency. BlackRock launched their Buidl tokenized money market fund. And what do you think it settles in? USDC. These aren't small experiments. These are trillion-dollar institutions making infrastructure decisions, and they're choosing Circle's product. If you're finding this useful, subscribe to Crypto Sayans. We break down moves like this before they go mainstream. Now let's talk about the real opportunity, because it's not what most people think. The direct play on USDC growth isn't buying USDC and waiting. It's understanding the two catalysts that are converging right now in 2025 and 2026. First, Circle's IPO. Circle filed for a public offering, and the expectation is it prices sometime in 2026. When Coinbase went public in April 2021, it pulled massive attention to the entire crypto space. A Circle IPO does the same thing, except Circle is a pure infrastructure play, the picks and shovels business of digital dollars. Analysts have floated valuations between $5 billion and $10 billion. If you can't get into the IPO directly, the indirect play is in assets that benefit from USDC volume growth. Solana, which processes a huge share of USDC transactions, Base, Coinbase's L2, where USDC is the dominant asset, and DeFi protocols like Aave, where USDC lending rates move with institutional demand. Second catalyst, US stablecoin legislation. The Stablecoin Transparency and Accountability for a Better Ledger Economy Act, yes, that's a real bill, is actively moving through Congress. If it passes, it creates a federal licensing framework for stablecoin issuers. On the surface, that sounds boring. What it actually does is make USDC the default winner. Circle is already compliant. They're already regulated. They're already working with US banking partners. A federal framework doesn't hurt Circle. It obliterates Tether's ability to operate freely in the US market. If Tether gets pushed out of American financial rails, that's $110 billion in market cap that has to go somewhere. Most of it goes to USDC. We're potentially talking about USDC flipping Tether for the #1 stablecoin spot by end of 2026. Now let's be honest about the risks, because there are real ones. First, regulation cuts both ways. The same legislation that could crown USDC could also add compliance costs that slow Circle's growth, or create openings for a Fed-backed digital dollar that makes all private stablecoins obsolete. A US CBDC isn't imminent, but it's not off the table either, and if the government decides it wants to own this layer of the financial system, Circle's entire business model gets disrupted. Second, Circle's revenue is heavily dependent on interest rates. They earn yield on the treasury reserves backing USDC. When the Fed cuts rates, which markets are pricing in for late 2025 and into 2026, Circle's margins compress. That could hurt the IPO valuation. Third, a broader crypto bear market could reduce USDC transaction volume significantly. In the 2022 bear market, USDC's circulating supply actually dropped as people exited crypto entirely. Lower supply means lower revenue for Circle. These aren't reasons to ignore USDC. They're reasons to size your exposure intelligently. So here's my actual take. USDC is the most underrated infrastructure play in crypto right now. Not because it goes to $2, it doesn't, but because every single application being built in crypto, every institution entering this space, every payment company integrating blockchain rails, they all need a dollar on chain. And USDC is the one they keep choosing. The opportunity is in the ecosystem it's building, Solana, Base, Circle's own upcoming equity, not in the stablecoin price itself. If you're looking at where institutional money is actually flowing into crypto in 2025 and 2026, it's not chasing the next meme coin. It's building on dollar infrastructure. USDC is that infrastructure. Pay attention to it. Subscribe to Crypto Sayans. We post breakdowns like this every week, so you never miss a move. Hit the bell too, because the best setups don't wait for you to remember to check.